Welcome. My name is Van Richards. I'm a chartered financial consultant, and I'm here today to talk to you about Intel. So let's get started with the daily stock analysis. The big news is today, Intel did not have a very good quarter at all. But before we begin into that, folks, I want to remind you that I am offering personal services through Richards Financial Planning. And if you need help in designing a retirement plan that will help you not run out of money during retirement, then go on over to Richards Financial Planning and you can sign up for a time to talk to me. I only offer service to residents of Texas, but if you've got other questions or if you like the information that I offer to you, subscribe to my YouTube channel or go over to Facebook or on Twitter, subscribe to one of those platforms. You can ask questions and I'll be glad to answer them and spend time and converse with you on the internet and get your questions answered and get you going in the right direction. But if you need help with a retirement plan, go to richardsfinancialplanning.com and sign up for a time to talk to me if you live in the state of Texas. So let's get right into talking today about Intel. So let's add everything into the screen here so that we can get moving. Okay, the first thing that I want to do is I know that a lot of you are familiar with Intel. Some of you that follow my channel here on YouTube have asked me to do a review of Intel. And it took a little bit longer today. So if you've been used to listening to me a little bit earlier in today, it just took a little bit of time to put this together because there's so much information. Now, the recording that I prepared for you, it's real short. It's 20 seconds, and it's actually got a couple of gems in there that I think are going to be information that might be helpful for you in making a decision as to whether that you want to buy, hold, or sell Intel. So let's take a look at this together. Okay, there's a couple of pieces of information that are really, really important in that. And I'm actually going to go back to it just real quick if I could. Right here, the PE ratio on Intel is at 10.11. The PE ratio, that's the price to earnings ratio for the average S&P stock, is going to be around 30. The company, as you hear a lot of bad news today, you have to remember that this is a huge, huge company. They employ over 110,000 employees. And if you look a little bit further, you can see that they're worth over $200 billion. So when there's people that are naysayers that are going to say that this stock is horrible, it's going to go out of business, it's not true. This stock is going to be around for a while. Let's take a look and see really what happened today. The big bad news, we're going to cover that first. Revenues were down about 4%. You can see here that the gross margin was off by about 5.7%. Research and development was down. Operating income was down. The only thing that was up was the tax rate. Net income was down 29% and earnings per share was down as well. So with all that said, let's see what's been happening in the last few days. 5 days ago, this stock was trading at 54.17 and a half. Today, it closed at 48.11. So it's had, the week's not been a very good week. The month has actually come out pretty even from that point. It's 48.82 a month ago, and I covered this a month ago. It's down about 1.48%. It ended today, as you saw, at 48.11. A year ago, it was trading at $50.55, a little bit over that. It's down about 5% for the entire year. So if you look at this and think, gee, it's off 11% for the day, well, not exactly. Yeah, for the day, but go back and look at it over a period of a year and look at the earnings too. If we look at the earnings that's been going on with this stock, Yeah, back in 2016, they had a bump, but they've actually had pretty good projections on their earnings. What they're looking for the fourth quarter is this. They're looking for revenues to be at about 17.5 billion. That's going to be off by about 14% year over year. Their operating margin, they're looking to have it about 26.5%, and the earnings per share is going to be down about 28%. This is what they're projecting for the entire year, to about $1.10. Now that's the bad news, but here's the good news. This has to do with dividends. And if you followed me before, you know I love dividends. Dividends are great. So let's take a look and see what's been going on with supporting those dividends. Year to date, this is when I tell you, folks, this company is not going to go away. They had cash operations profits this year of $25.5 billion. They have $15.1 billion in free cash flow. They paid dividends of $4.2 billion. Now, that's going to decrease because they had some stock buybacks that went on too. Their dividend going forward is at 2.45%. And if you're a dividend investor, you know that that's really pretty good. Now, when we compare it, remember, when we look at stocks, we look at the earnings, we look at the competitiveness, and we look at the stability of the company. We know that their earnings are off. Let's look and see how they're competing. You can see that actually Intel, yeah, they're not competing with AMD and NVIDIA, but when you look at it compared to Texas Instruments and Qualcomm, they're right in the ballpark. If you follow the spaghetti graph, they're right in the ballpark. AMD is overpriced at this point. And, you know, as we go forward, we talk about all this different stuff. And you think, gee, what stock would I rather own going forward? I'm not sure. I think that I would probably own, if it was which would you rather? I would rather own Intel than AMD right now because the profitability possibilities are much better. They still have some big advantages. They have some cost advantages from the size of the company. They have process design know-how that nobody else has. They were the originators of Moore's Law. Remember what Moore's Law is? That's when the capacity of the chip is supposed to basically double every 2 years. They are going to be shifting, I believe, to the notebook market, and we're going to talk about that at the very end when we talk about some of the quotes that Bob Swan made today to different news networks. They're competitive in the CPU market, and the bulls. Let's see what the bulls are saying about this. These are some of the different comments that have come from some of the different analysts. Intel, I've pounded this in, and I hope you remember it. It's still one of the largest semiconductor companies that's out there. Now, their design center group has benefited from mobile devices because of server cells. But when we look at it and we think of what's going to be going forward, they have been very savvy with acquisitions and sales. Just recently, they sold their NAND memory group to SK Hynix for $9 billion, which added to their bottom line. It helped them with their stock buyback, and that helps with future margins. So think all that cash going in and the stock buybacks is actually a benefit. As far as acquisitions go, they've done very well in past years, but we have to look at the downside of this stock too. There are some big headwinds which they're facing. Intel is facing a declining PC market that's out there. They also haven't had the ability to be like Qualcomm and break into the smartphone market. So that's been a difficulty for them. So as you think, well, do I want to own this stock going forward? Would you have to think that with that, I said design center group, it should have been data center group on the previous slide. They've had some real problems in the development of the chips, the processors in their data center group. Remember, this is primarily a group that's designing servers, and they've had some difficulties in processing that. Their foundry just hasn't been able to come up with the development, and there is a need for a foundry. There's been some talk that it would help if they went to Taiwan Semiconductor. I'm not 100% sure of that, and this is the biggest reason why. You've got the federal government that would be involved in this, and you know that the federal government, the U.S. federal government, has been very antsy about allowing other outside countries to be involved in our computer industry. You've seen the tit-tat that's been going on in between the U.S. and China. yes, Taiwan is a friendly company, but you would be taking the only, I'd say, the largest foundry operations and moving it offshore. I don't know that the federal government's going to sign off on that. So that's what some of the bears would be saying. Now, on a positive side, friends, yes, this stock closed at about $48 a share. This is something that you really don't see that often. The fair market value that Morningstar is picking on this stock is $70. And this stock is one of the few 5-star stocks out there. And if you notice, that said that a 5-star stock doesn't guarantee a future return, but this stock is far below what its actual value should be. When we look at what the analysts are saying right now, today, with just generally 25 analysts that were polled, the average analyst, there's 13 of them out of the 25, were saying that this is a hold. Now, that's good information to know, but let's actually look at some of the prices that these analysts are saying that they're looking at. The only sell that was out there so far has been from Goldman Sachs, and that was at $46, and we're within a breath of $46. If you listen to the commentators on CNBC, they're pegging more of about 44 to 43. The low over the past 12 months, including after the coronavirus market crash, was around 43. So we're pretty close to that. Remember, you have a $200 billion company that employs over 110,000 people. They're not going out of business. So if you are looking for a stock that you want to buy, this might be one to consider. I don't think it's going to go away. If you listen to some of the other analysts that are positive on this stock, it's getting into the buying range. And if you think back of stocks, let's say in February and March, and you were going, gosh, I don't know if I should buy this stock. The market's going, it's down so low. It takes a lot of bravery to buy a stock when it's low, and you have to have confidence that it's going to come back. I think that the company is going to have some positiveness going forward. If you look at some of the comments that Bob Swan made today, he said that they're going to be moving a lot more notebooks than they are desktops. And they're also going to be moving more away, trying to move more away from the enterprise and the government operations. Now, that was the big problem with the data center. Data center processors, there was a lot less demand. In a little bit further, that's not printed here, some of the information that came out from Bob Swan was that they had a lot of inventory, and that inventory bled over and was sold off rather than being produced. And that was one of the big problems that they came across. So they're looking for probably having less demand in the enterprise and in the government operations, and more consumer demand going forward. Also, they're going to have more demand and more work towards smaller core products, which will be coming out at the first of next year. Now, if you have been listening to the news, and you know that a lot of the school systems have had problems getting computers. A lot of them use Chromebooks. And this is an area that's wide open. You have a lot of schools that are trying to supply students with computers. And when they're trying to do that on the cheap, they're going to be looking for solutions. And Intel is saying, according to Bob Swan this morning, saying this is an area that they're really going to start to tackle. Also, their Tiger Lake processor is ramping up a lot faster than anticipated. So going forward, I think that there's good news that's going to be looking for Intel. The question is going to be, is it going to be something that's going to fit into your portfolio? Now, remember, I talk to people about long-term investing, not swing investing, not day trading, long-term investing. And I would say that 3 years from now, if you bought this stock, you'd be making a good decision. Can I guarantee that? Of course not. But the idea is they are cheap, cheap, cheap. They're at a really good buying range from this standpoint. They're not going away. They're going to figure out their problems, and they're going to move forward. Okay, folks, that's my opinion, and I'm sticking to it. I hope that you all have a really good weekend. And remember, if you've got questions, enter them into the platform, and I'm glad to answer them offline or maybe bring them up in my next broadcast next week. So going forward from that, I'm going to say to you, have a great Friday evening. Have a great evening.